Level 1. The open. The screen loads and your heart does something stupid. You've seen the numbers before. Charts, percentages, the red and green bars people post online with captions like life-changing and quit my job. But this is the first time real money is sitting behind a real button and your finger is already hovering. You don't have a system, you have a feeling. The feeling says, this stock is going up because it went up yesterday and the day before, and because someone in a forum said so at 11 p.m., while you were still awake, still searching, still trying to crack the thing everyone else seems to have already cracked. You click buy. For 40 minutes, you're a genius. The position moves in your favor by $180, and you take a screenshot. You don't sell because selling $180 feels small, and you came here for something bigger than small. Then it reverses. You watch $180 become $90, become zero, become negative. You tell yourself it'll come back. It always comes back. You've seen the graphs. They all trend up eventually, right? So you hold. You hold through lunch. You hold through dinner. You hold until the market closes and the loss is $340, and you close the laptop like that makes it not real. This is the first rule of level 1. You don't know what you don't know, and that ignorance feels exactly like confidence. You deposit more, not because you have a plan, because you need to be right. Level 2. The education trap. You've lost enough now to take it seriously. $1,200 gone in 6 weeks, spread across 11 trades that each made complete sense at the time and make 0 sense now when you look back at your notes, if you can call them notes, which you can't because they're really just post-it rationalizations you wrote after the fact to make losing feel like learning. So you go looking for structure. You find it everywhere. YouTube has 17 channels dedicated to the exact system you need. There are courses, $297, $497, $1,997, each one promising the thing that the last one didn't deliver. You buy 2. You watch them at 1.5 times speed because you're serious now, because you're not like the people who quit, because you take notes in a real notebook with tabs. You learn the vocabulary. Support, resistance, RSI, MACD, moving averages. You learn to draw lines on charts and feel the deep satisfaction of a line that touches 3 points, which means you're pretty sure that the line is real and the pattern is valid and the trade will work. The trades don't work, or some of them do randomly, which is worse because a random win at this stage is indistinguishable from a skill-based win, and your brain cannot tell the difference. And so you keep going, keep depositing, keep watching the channels, keep buying the courses, keep drawing the lines. The second rule of level 2, information is not edge. Everyone has access to the same YouTube videos. Everyone has learned the same patterns. A pattern that everyone knows is a pattern that the market has already priced in, which means by the time you see it, it's already too late, and you're not entering a trade, you're becoming the exit liquidity for someone who entered before you. You don't know this yet, but you're starting to feel it. Level 3. The first real loss. There's a number that breaks you. Not the small losses, those you've metabolized. $200 here, $400 there. It hurts, but it's abstract, the way a credit card bill is abstract until the statement arrives. The number that breaks you is specific and large and arrives on a Tuesday in the middle of a trade you were so certain about that you sized up. Sizing up means you put in more than usual. It means you believed. The position goes against you by 8% before you even check your phone at lunch. You open the app in the parking lot of a sandwich place and you feel your hands go cold. You're down $2,600 in 40 minutes on a trade you told your partner was a sure thing. Not in those words, but in the tone, in the casualness, in the way you said, "I'm putting in a bit more this time," like it was nothing. You sit in the car for 20 minutes. You don't eat the sandwich. Something shifts here that doesn't shift back. Up until this point, trading has been a game with real money attached, which is a dangerous combination, but at least you can still see the exit. After this Tuesday, it becomes personal. You need to recover the $2,600, not because of the money exactly, but because of what losing it means, what it says about you, what it proves to you, to the part of yourself you're most afraid to disappoint. Revenge trading is what happens next, and you don't call it that. You call it being strategic. You call it doubling down. You call it calculated risk. The third rule of level 3, the market doesn't know you exist. It doesn't owe you a recovery. It will not wait while you get your head right. The emotional weight you bring to the screen becomes price action in reverse. The more you need the win, the more your decisions will guarantee you don't get it. You lose another $900 by Thursday, and then somehow you don't quit. Level 4, the system. You stop looking for tips. This is the turn. It doesn't feel dramatic. It feels like exhaustion, like the quiet that comes after you've tried everything and you're finally tired enough to try something different. You build a journal, a real one, entry, price, stop loss, target, reason for the trade, outcome, review. You go back through 6 months of trades and you do the math on paper, and the math is worse than you thought, and also clarifying in a way that hurts and helps simultaneously. You were gambling, you knew it the whole time, but seeing it quantified, 73% of your trades entered without a defined stop loss, average winner held for 2.3 days, average loser held for 11.4 days, makes it impossible to keep pretending otherwise. You start cutting losses faster. This feels wrong. Every instinct says, hold on, give it room, it'll come back. But the data from your own journal says the opposite. Your winners don't need room. They move immediately, and the trades you held hoping for recovery almost never recovered. You pick one setup, just one. You spend 3 weeks watching it without trading it, just observing, cataloging, seeing how often it appears, and what percentage play out the way you expect. The percentage is lower than you hoped, around 54%, but the average win is 1.88 times the average loss, and when you run the math, that's actually profitable over a large sample. You feel something new, boring confidence, not excitement, not the electric feeling of a big win incoming, just the quiet, flat recognition that if you execute the same process over and over, the numbers should work out. The key word is should. The key word is over a large sample. You are betting on process, not prediction. This is the hardest psychological transition in trading. You are giving up certainty, which you never had, in exchange for probability, which you can build. Most people can't do it. The human brain was not designed to think in large samples. It was designed to think about this trade right now and whether it works. You learn to override that slowly. Level 5. The grind. 6 months of consistency looks like this. You wake up at 6:45. You check pre-market. You mark your levels. You set your alerts. You do not trade the first 15 minutes. You wait for your setup. And when it appears, you enter, and when it doesn't, you don't. Some days you make $200. Some days you lose $150. Some weeks are flat. Some months are flat. You are not getting rich, you are learning to not get poor, which turns out to be most of the work. Your account is at $11,000. You started with $8,000, and you've made net deposits of $4,200 since. So in pure P&L terms, you're still negative, but the trajectory has changed. The last 4 months are green. Not dramatically, $340, $580, $210, $670, but green in a way that feels earned and repeatable, not lucky. The people in your life don't understand why you're still doing this. They remember the early losses. They don't see the journal. They don't see the system. They see someone spending hours in front of a computer doing something that sounds like gambling, and their concern is reasonable. And it costs you something to keep explaining, so you stop explaining. You trade in the morning, you don't talk about it at dinner. You have a second life in a blinking terminal, and nobody in your first life quite knows the shape of it. And that's fine, because you don't have the words yet anyway. The 5th rule of Level 5 consistency is invisible. There's no moment where it clicks. There's no trade that makes everything make sense. It's just the accumulation of correct, small decisions until one day you look back at the last year and realize the losing months are outnumbered and the account is higher, and you are different in ways you can't fully articulate. You manage risk now the way some people manage their breathing, automatically, without thinking, because the alternative is unacceptable. Level 6. Scaling. You decide to get serious about size, not recklessly. You've done the math. Your strategy has a verified edge. Over 400 plus trades across 18 months. Your win rate is 51%. Your average risk to reward is 1 to 2.1. You've stress tested the drawdown periods. You know the longest losing streak in your sample was 9 trades, and you know how that felt, and you survived it. You increase position size by 40%. The P&L swings are larger now. A good week is $1,400. A bad week is negative $900. Your emotions, which you thought you had handled, require retraining at the new scale. Losing $900 in 4 days hits differently than losing $640. Even though the percentage is identical, the number is not, and your brain responds to the number. You shrink back down, you scale back up, you shrink again. This cycle takes 3 months before the larger numbers normalize, and you can execute without your pulse changing. At $180,000 under management, your own money compounded carefully over 2.5 years, you start getting questions. A colleague wants to know how you do it. A friend offers to give you $25,000 to manage. Your brother asks if you're actually making money or just talking about making money. You are making money. You have records. The records are real. You take on the $25,000, and for the first time, you understand that managing someone else's money is not the same as managing your own, because someone else's money has a face and a name and a phone number, and they will call you on the days it's down. Level 7. The architecture. You manage $400,000 in positions before lunch, and none of it feels real anymore. That's not a complaint. That's just what happens when numbers get large enough. They abstract. The $12,000 you lost on a bad Thursday is an entry in a spreadsheet. 3 years ago, $12,000 was a crisis. Now it's within expected variance, and you process it the way you process weather. You've built infrastructure around the trading, a proper entity, an accountant who specializes in traders, risk parameters that are documented and enforced, and not subject to how you feel on any given morning. You've hired someone part-time to handle research and data, not to make decisions, but to extend your capacity. You've also made a series of silent trades that nobody outside this room will ever know about. Not illegal, you've been careful but ruthless. You've exited positions in ways that moved against smaller traders in the same setup. You've taken the other side of trades placed by people who are right now at level 1, feeling that electric certainty. You've been the exit liquidity that someone at level 2 didn't know they were buying. You know what you are in the ecosystem. You are not a victim anymore. You are not a student. You are infrastructure. You are the thing the market is made of on days when it moves against the people who trust their feelings. This doesn't bother you the way it would have bothered you once. That's the quiet cost embedded in level 7, and you only notice it when you tried to remember what it felt like to care about individual trades. The emotional texture of that early period is gone, not replaced by something better, just replaced by something quieter and more efficient. Level 8. The apex. You don't talk about trading at parties, not because you're hiding it, because there's nothing to explain that would land correctly. You've tried. The moment you mention the numbers, the conversation changes in one of 2 ways. Either the person wants you to teach them, or they go quiet in a way that creates distance. Neither is the conversation you wanted. Your mornings are still the same. 6:45, pre-market levels, alerts. The ritual is identical to 3 years ago. The account is not. You think sometimes about the version of you that sat in the parking lot of that sandwich place with cold hands and $2,600 gone and couldn't eat. You recognize that person. You feel something for them. Not pity exactly, more like the way you'd feel watching footage of yourself learning to walk. The falling is necessary. The falling is the education, but you can't tell them that. You couldn't have heard it. Nobody can hear it until they've been through enough of it to know what you mean. The market has a new class of beginners every day. Every single day, someone opens an account with $5,000 and a feeling and a forum post and clicks buy on something that is going to go against them by Friday. They will lose. Some of them will lose and quit. A few, very few, will lose and stay, and eventually learn to lose less than they win, and then over years to build the thing you've built. The levels don't end. The levels don't get easier, they get quieter and larger and more consequential, and the people at the top are not louder or more certain, they are calmer and more patient and much harder to read. You know what the market is. You know what most participants are. You know the structure well enough now that you can feel when something is being distributed, when smart money is exiting into retail enthusiasm, when the setup that looks clean is actually a trap with a perfectly rendered door and no floor behind it. You walk past those. You take your setups. You manage your risk. You close the terminal at noon. You make a cup of coffee. You sit with the quiet. Somewhere, someone just opened an account. They've been watching for weeks. They have a feeling. They found a forum. They know about the moving averages now. They took notes. Their first trade is loading. They think it's simple. They're wrong. But they'll learn, if they stay long enough. Most won't.